Hello everyone, and welcome to part 4 of the How to Pass a Prop Firm challenge. Now you can't see me today because today is the last segment, the last part of this 4-part series, where we're going to be going over the charts. So far we've obviously taken our time, broken this into steps, given everyone a chance to sort of go through the mindset in part 1. Obviously, they're not getting rich quick, fast route, the work that has to be done first, obviously working on a repeatable process that we're going to go through when it comes to the chart wise today. Treat as investor capital, that sort of things when it comes to the mindset. Then we talked about in part 2 the biggest mistakes, obviously rushing to pass when you have 20 trading days to make obviously your 8 to 10% on average, over risking, allowing the challenge to change your plan, even passing your challenge. Then same applies obviously when you get the actual real account, make sure you follow the same plan to keep it. And then obviously part 3 we went into repeatable process and what that should cover when it comes to your mindset, your routine, and obviously your trading plan. Now today we're going to go through 2 different examples, so I have them written out actually here. So 2 different processes, here they are. So we have process 1 for day trading, and then we have process 2 for scalping. I was going to do one on swing trading, but to be honest with you, majority of people who are doing these prop firm challenges will more than likely be doing one of these 2, the day trading or scalping, because at the end of the day, majority of the prop firms won't let you hold over the weekend. So therefore, we'll just focus on these 2 that will be most people will be using and focusing on. So let's crack onto it, shall we? Now, originally, as you can see written out in front of you, we were going to talk about fibs and support resistance, liquidity, and basically stuff that I don't use altogether, and try not to show too much, if you will, and just use like a more retail sort of strategy. However, as I was finding it difficult to do it, number one, and honestly, we at the Vipers, as part of the Viper group, and just us in general, myself and Cal, we always want to give as much value as possible. And so therefore I will be going through these trade examples not in great detail, because I'm not here to be teaching, say, the strategy. However, I will be showing you the trades from our strategic point of view to show you exactly how we're looking at the market, getting into trades, and more importantly, obviously, for the purpose of this series, is to show you exactly how to pass a prop firm, essentially, with these 2 processes. So from a day trading point of view, and then obviously a scalping point of view. And as you can see, we've set out our repeatable process for each, and let's just crack on with it. Now I will be releasing a video breakdown of the recent trade, because I just passed 2 more $100,000 verifications with Funding Talent, taking the total funding with them to $300,000 and $400,000 with FTMO, using the same sort of process. One of the trades is the trade that I actually took. To pass that, I will be covering in a separate video with a full breakdown of using our exact methods shortly. So look forward to that one as well. So let's crack on, shall we, into process 1. So we're going to start with process 1. Let's move this process 2 out of the way. Process 1, day trading mindset. So this trade will last probably just over a day, if not less, but will last probably longer than a couple hours, right? We're going to be looking at the structure of the 1 hour, maybe even the 4 hour as well to help, and then also using our fib, our support resistance to a degree, liquidity. Our entries are going to be used from order blocks, and then our minimum risk to reward we're looking to use on the day trade is actually, we have 1 to 5 here, but to be honest with you, with the day trades we could be looking at 1 to 10. So we're going to shift that out. I put 1 to 10 underneath, so maybe here we go. And we're looking at maximum 1 or 2 trades a day, more than likely going to be 1 when it comes to using a day trading mentality. And then so we'll focus on that one firstly. So let's crack on to the chart. So we have EU here, so we're only looking to trade 1 pair as part of this repeatable process, so we can focus on basically the movements of 1 pair. Now that isn't necessarily a secret to success. For some, trading 1 pair is no good for them, right? Because it means that sometimes when 1 pair gets unclear, they'll want to look at another one, or just generally it helps them, especially as a day trader or swing trader, to have multiple pairs. But just for this example, we're trading one pair. We're going to look at one pair, Euro USD. We're going to start off with our structure, really. So if we take a look at the structure, if we first look at our daily time frame, what we can see is quite clearly we've had an impulse and we've ever so slightly broken to the upside. Now, putting that to one side, we have had this impulse without any correction at all. You can see we broke this significant low on the daily, and we still had no retracement. So we're expecting that retracement to come in. So when we go down to the 4 hour, what we can see here is from this point, we have had a very big impulse, right? We haven't had much of a retracement either, even from here. Okay, so if we were to take a fib from our most recent swing low to our recent high, where we haven't had a retracement, we know that we're in for a retracement at the very least to these lows, at the very least. Let alone obviously to these lows where we're currently at now. Let's move away that fib then. So as we got to our high, we can see that we broke this low here. As we go to our 1 hour, we can see our first case of a slowdown and price coming back down is we broke this low on the 1 hour, right? I'm going to try and use this arrow tool instead. Maybe it'll be easier. So we broke this low right here on the 1 hour, making a lower low, and we're looking at a lower high, right? When we make that low, we can take our high down to our low, and we can see price coming ever so slightly into our premium end of the fib, so 50% and above. Now obviously we know the majority of people like that golden ratio, that 61.8, 78.6, but it doesn't always happen, and for us we're not really focused on that. What we're focused on is price being above into a more premium end in price. Sell high essentially and buy low. That's all we're bothered about, and then we focus on the price behavior and the structure being the king. So as we can see here, price came up. We do have clear support resistance here. You can see price has respected this level previously. I don't know if we can see any further back, but even further back you can see it's been respected many times throughout past price action, many times on the hourly there. So we can take note of that, and that's where price has sort of been capped, if you can see. Now we're going to remove the fib just to keep the charts nice and clean. Now that's something that we always advise. Keep your charts nice and clean, so that nothing can throw you off, and once you've noted it, you're pretty much able to understand that yes, Fibonacci wise 50% is here. Anything above that is going to then take us into even more of a premium end. Now as of right now, we're stuck and sort of capped at this resistance level, which we can see a reaction from. This is where we then drop lower. Now notice our bias, when we talk day trading, essentially means our bias is coming from a higher time frame. So when it comes to a day trade, our bias is coming from our sort of 1 hour swing points, potentially even our 4 hour. That's edging towards 4 hours, more edging towards our swing trading, but with the swing trading you're probably more focused on your sort of daily time frame, even your weekly to a degree. But you will incorporate the 4 hour as well. Now with the day trading, we will incorporate 4 hour as our sort of higher time frame, but then our 1 hour will be our main time frame we're going to be using for our highs and lows to then capture our day trades. So we have our 1 hour break of structure, capped at the resistance here. We've used our 4 hour to understand why would price look to retrace from this level, at least to these lows where the 4 hour had its original impulse. Now, as we then go lower, so we're going to drop down to our 15-minute time frame. It gets nice and simple for us. What happens? So this is going into the London. So what are these blocks, you might be asking? These are all the sessions, by the way. So the blue is the Asia session, the green is the London session, and then the very light shade of grey is the New York session. So going into Asia, you can see we had an impulse. We broke into the downside, breaking minor structure to the left. Nothing significant though. However, going into London, we did pull up and then actually break our most recent 15-minute low. Now this is all coming off the back of one, going into a premium end of our fib, being capped at our resistance level, key support resistance level on the 1 hour. We've already reached a extreme high on the 4 hour, breaking that daily structure as we mentioned ever so slightly. And then as we can see here, we then get our order block. Okay, so we have our last area before price then led to a break of structure. Price came back to our entry point and where we would look to enter. Right, Not to mention, obviously, the same principle of having a new low form, price coming back to a premium end, so selling high, and then obviously looking to target our new low. Now, stop loss wise, we're talking just above our block. Potentially we could even look to put it above our resistance level to be safe. Okay, now we're targeting our 1 to 10. As we can see, okay, targeting our 1 to 10. Sorry, we get that in. And to be fair, with this trade, we would be looking to put it just above our order block. Right, well, that's how we would do it, to be honest with you. I'm not sure if anyone else uses order blocks. If you do, obviously drop a comment below. If you don't, then also drop a comment below. Here we go. So, why does this trade make sense then? Let's break it down once again. So we've done, from our 4 hour, we have highlighted that we've had our impulse. Okay, so we've seen our impulse. What we're going to do is just clear this up here. Okay. So we've seen our impulse. We haven't had a correction. So what we're expecting at the very least is price to come back, to make a retracement into our discounted end, so on a low side where potentially buys could come from. Alright, we've seen this imbalance that's been left as well, and price has come to fill that at the very least. So it's a smart reason as to why price and our bias would be short. To back that up, however, though, is we had our 1 hour break of structure, taking out the low here. So I'll just mark that out for you. Taking out our low, making a lower low. Therefore, we can then take our high down to our new lower low, and we can see that price has come back to our premium end ever so slightly, but more importantly into a key support resistance area where price is then being capped. That's where we then can move lower to see what price behavior is doing there. And as we can see, going into the London session, we've pulled back up, we've then impulsed down, breaking structure, leaving an order block for our entry. From the order block, we can then set our entry. We can then set our quite tight stop loss. So with this, it's a 6 pip stop loss. Because at the end of the day, if the order block wasn't to hold, then it would be invalid anyway, and price would more than likely look to move higher regardless. But using our premium end of the fib, and more importantly that support resistance, to know that price has been capped there, and more importantly and most importantly is our structure. At the end of the day, our structure has broken down to the downside, making a lower low. It should only make a lower high. It should not go and make a new higher high. And at the very least, we should see price come to these lows, let alone obviously the higher time frame, which is obviously the one that's in charge, the lows down and fill this imbalance that we mentioned, which happens perfectly. Giving us our 1 to 10, right? Giving us our 1 to 10, so fitting our repeatable process. Now, prop firm wise, if we're using 1% risk, we've passed in one trade, right? If we're using 0.5% risk, we've then managed to get 5% in a single trade, right? So that's a great trade example right there. Okay, so let's remove this one now. Delete everything after this one, and then we'll move on to our next one. Let's bring the price back, shall we? Obviously, if you do have any questions on each of these trades, feel free to message me, or even just drop it in the comments below, and I will make sure to reply to any questions that have been left there. Now, very similar, to be fair, very similar trade comes up next. So we have obviously our high down to our new low that forms. Okay, so high down to our new low, and we'll bring price back here for the time being. And what we can see is price again going into our premium end. Very similar. Price likes to repeat itself, and that's why we call it a repeatable process, because we're using tools that we know hold weight in the market, will repeat themselves in the market to give us an edge necessary to then be able to trade efficiently, trade confidently and clearly, and of course to pass a prop firm challenge. So what's happened here? Back into the premium end. Okay, we have this key, and very clear, and this is on the 4 hour, let alone the 1 hour, very clear support resistance level, held and capped price many times, and if we go further in the past, same again, holding price, very similar to our original trade. Now, same again happens here. We have our structure, right? Price has been capped to the resistance, and now we can go lower to see the structure on a lower time frame. As we've gone lower, what we can see is price has broken to the downside quite aggressively. Okay, if we go lower, one step lower now, what can we get? What we can see here is very much one of the same. What we can see here is the same once again. Now we have broken minor structure to the left here on the 5 minute. Price has come back up. Okay, and what we get is our impulsive move and break to the downside. Okay, but we get our order block right here. Okay, so we can see already we've already been capped at our resistance level. We've seen an impulsive move down to the downside. Now we could take our last candle before that break of minor structure to the left there, and that could work. But more importantly for us, we can see that price came up, broke to the downside impulsively, leaving our candle. Now we could go lower potentially. Where were we? Just here. Could go lower to make it a bit clearer for us, to give us our entry area, which is right here. Okay, and that gives us our order block once again. Now when it comes to liquidity, because I have mentioned that within the process, liquidity wise, we could be using the session lows as our liquidity. So in this case, you can see the Asia session low has been left intact, as well as the London session coming into New York. But more importantly is the structure of the higher time frame to give us confidence of our direction. Because again, as we've noted, price hasn't returned to this area where we had that original impulse from, leaving an imbalance and even leaving minor trendline liquidity there as well. Now, as we go lower and back to our entry, we are then taking another day trade, and it's the same principle really. Price broke structure to the low, price coming into the premium end, order block, and even support resistance here on a minor level. If you notice, even on a minor level here, previous support broke, held as resistance once, impulse broke structure, came back, held as resistance once again before then breaking. Right, so taking our entry here, even using a round psychological number 18380, we then have our stop loss just above, giving slight breathing room, and then 1 to 10 being achieved. Let's see, right here. Now let's take a look at where that sits on the 4 hour. So on the 4 hour, that sits literally at our, just going past our recent lows, which is fantastic, right? Which is absolutely fantastic. And why is that fantastic? Because it means that we don't even need price to necessarily break all the way to the downside. Once if it reacts from here, once if there's key support here that was held previously and it holds again, as we can see here, right? Sorry, it's a bit better. Here, yeah. Held as support quite strongly, held as resistance, held as support previously. Once the price didn't want to break lower than that. Well, thankfully, our target is met before, just on that level, essentially. So we're essentially targeting a key support resistance level to get our 1 to 10 target. So notice though, even though we're day trading, so these trades are slightly longer in length and hold time, we're talking, roughly 2 days for this one, the previous one being just over a day. So we are good day trades. But notice that we're still using the same concepts as we go down the time frame. So we went from daily, 4 hour, 1 hour, 15 minute, right? Even to the 5 minute, even to the 3 minute here. But yet the concepts are all the same. From the order block to the structure, to the fib and the premium pricing of the fib or discounted pricing of the fib, to liquidity, absolutely, even the support resistance, absolutely everything. All the concepts are the same. The market does not care about time frame or the pair that we're trading. It cares about the rules and the principles that we're following, and that is something that we instill on lesson 1 as part of the Viper group. Now, as I said, I know I haven't gone into great detail of how exactly and why we use these particular tools and how we trade this way, but that's not the purpose of this video. The purpose of this video is, of course, to teach you how to pass a prop firm challenge. And as you can see here, 2 trades now, 1 to 10. If you're using 1%, you've passed it on the first trade. If you're using 0.5%, you've passed it in 2 trades. Repeatable process wise, we use the exact same tools. Both trades are almost identical. If you even looking at them, almost identical. The only difference with this one is this trade came in New York, last trade coming in London. Now as a day trader, you're going to be trading those 2 sessions at the very least. You're going to be trading at pretty much any time because you're going to be very specific in your highs and lows when it comes to your 4-hour and 1 hour compared to when we're scalping. And as we mentioned, the scalping examples we're going to be going over. If we jump back now over here, process 2, we're going to be only looking at the New York session as our repeatable process. Okay, and we're looking at 1 to 5s. So our aim will be to go through 4 1 to 5s in case we're using 0.5% risk, which would then mean 2.5% each, giving us our 10%. Now, of course, we're not taking into account losses, but again, as you can see, with the power of risk to reward, you got 20 trading days. If you're taking 1 trade a day during the New York session, over those 20 trading days with a 50-50 strike rate, then you're still passing that challenge, right? The purpose of this video is to explain how having a repeatable process gives you an edge in the market. More importantly, gives you confidence in the market, gives you freedom to be a trader and to live your life. Because if I'm only trading the New York session, that's roughly about, especially the open, so not even the whole session. We're only talking about 3 hours, roughly. 3 hours where I'll be trading a day, where I need to be on the ball. Especially if there's something, something that's viable. There'll be days where there's not something that is happening in the New York session clean enough, or I just don't see anything clean enough for me to take, and that's absolutely fine, right? Absolutely fine for me to be that way, and that means I get a day off. And that's what's giving you freedom, rather than just sitting on the markets, not having a really truly defined plan or any repeatable process. And I'm essentially just sitting all day trying to get trades, more than likely losing, and I have no freedom. And then essentially, why have I got into trading? Because that's the whole reason the majority of people, if not everyone, gets into trading, to have that time freedom. Okay, so we'll get rid of these for now. Okay, and let's look at scalping examples now. Now, scalping to me isn't necessarily just a trade that lasts, say, 15 minutes. They're great. If we can get 1 to 5 in 15 minutes, which has happened before and previously, fantastic. However, it's not something that we force. It could be that our trade takes an hour or 2 max, maybe a couple hours, which is absolutely fine. I'll still class that as scalping. So let's take a look then. So we're still using the overall structure to our advantage, and we're going to take a look at the last 4 New York sessions to see what has price given us in those New York sessions, right? In those last 4 New York sessions. So we'll start with the first one up here. We're just going to bring price back a bit for us. Now, interesting enough, this is actually the same trade, I believe. Yeah, same trade. So maybe we've already gone over that one, so you'll know exactly how we'll get into this trade. So we'll go on to the next one then. So as you know, we went for 1 to 10 off that one. It would have been 1 to 5 for us. So that's 1 to 5 there, rather than going over once again. It's the same exact method how we would get in. If anything, that was a day trade with a scalping sort of entry for that particular one. So we'll move on to the next one, which is right here. Now, what we can see here is where's price come into? Prices, if we zoom out firstly. So even as a scalper, I still use higher time frame analysis, more importantly structure, to still give us a reasoning for our direction and bias. So we can see here key area support resistance. We'll use the horizontal array tool here, horizontal line, sorry. As we zoom out, we can see very frequently used and respected level. Okay, so price is tapped in there, fantastic. We've reached a low, fantastic. Now, as we come into our New York session, so we can see in Asia, we've come down, we've left the Asia high intact. There's a great reason in terms of liquidity as to why would price look to come to these highs. All right, we've also left the London high intact, again, leaving relative equal highs. Another reason as to why would price look to go to these highs. Now, on the 5 minute, we can see we break minor structure here, and as we go lower, oh, sorry, I haven't brought price back with us, so rather than scrolling every time, we'll bring price to here. So as we go lower, what we can see quite clearly is price had its impulse, breaking minor structure, right? So we know that the impulsive move has happened, and we have the potential to move to the upside, targeting this liquidity at the least. Now, we've had this impulse. We take our same principle from low to the high, and we can see that price has gone ever so slightly, literally grazing the discounted end of that fib, right? Tapping that 50%. Now on top of that, we can see as well that we have our support and resistance level, right? Previous resistance held right here. Even if you pull it right to the right here, previous resistance. Price has tapped above, but again, respecting that level. Again, now broken above, respect to support. Another reason. Great confluence. And remember, this is New York session, so we're only looking at New York. We're using the exact same repeatable process, even as a day trader, but just on lower time frames. Now we're on the 1 minute. Now order block rule, last candle before our void, leading to a break of structure. So order block, impulse, breaking the structure to the left here. Price came back, giving us our entry. Here we have our entry, stop loss just below. We might give it a little breathing room again, so just below is 1.4. We'll give it 2.5. And again, 1 to 5 being met even before we had to take any of that liquidity. Even before, right? Now as a scalper, this is very interesting, right? Because something you have to understand and accept is if your repeatable process is only to trade New York, okay, doesn't mean you have to close your trade entirely, but you're going to have to fit your rules. If your rules are to close, say 80% when you hit 1 to 5, then make sure you close 80% when you hit 1 to 5. However, you need to get okay with if price was to continue. So if I hit my 1 to 5 here, but yeah, look, price could have gone to 1 to 10, 12, where could price even end up to, even all the way up here? Price could have got to a 1 to 15. Fantastic. But that's not part of your plan, right? It's not part of your plan, right? It doesn't matter if it went there, because you're coming back the next day, right? You're coming back tomorrow in the New York session to get another 1 to 5. That is your repeatable process. And this is where you have to ask yourself, are you truly disciplined to your plan? You might have spent the work and spent the time to make a plan, but are you truly disciplined towards following it? That is something you have to ask yourself, because if you break the plan even by holding that trade, it might pay you this time, but what about next time, right? What about next time where you try and hold longer than 1 to 5, it comes back and takes your stop loss, or you break even, and that's 2.5 or 5% that you no longer have, and more than likely will open the door to you breaking your plan even more. When it comes to revenge trading, or when it comes to taking more trades in that particular day, taking a trade in the London or Asia session, for example. Right, these are the things that you have to really understand when it comes to a repeatable process, that you have to be disciplined, right? It's not a repeatable process unless you repeat it, follow it every single day as you planned and as you've seen gives you an edge in the market. So here's 1 to 5. We've already had the previous 1 to 5, so that's technically 1%. That's a 10% passing your prop firm challenge. However, if it's 0.5%, which is what I advise, then you are halfway there. You're on 5%. Let's go to the next New York session, shall we? Again, I'd just like to mention any questions, any takeaways, any feedback, please feel free to put it in the comments below, and obviously make sure you're subscribed as well. Taking a look at the next New York session, where were we? Let's go back. So the last one we looked at was this one here, this long move. Was it this one? No, sorry, it was this long move here. So now let's look at this move here for this New York session. Now, yes, price went long, but I believe this was off the back of news. Yes, this was off the back of news. Now, news trading, some of these prop firms or many of these prop firms don't let you trade news, so you might have not taken the long or tried to take the long because you would have been avoiding it. And plus, trading the news is a bit of a gamble unless you have that understanding, or unless you're feeling very confident about your technical analysis. However, for us, same principle, using this higher time frame for our bias, so we can see our high down to our low, right? Price is in our extreme premium end. What I mean by extreme is if we went any higher than this, we would have broken structure. So we're quite confident in a sell opportunity coming from where we are in price. As we go lower, we can see nice order block to the left here, but also what we can see, which that order block sits within, which is a nice confluence, is key area of support resistance here, right? Resistance, held as support previously, never came back to retest that. Resistance again, sat as support there, resistance, cleans resistance once again. Very good level, as you can tell. So that matches on top. Now, as we go lower, so we just had the news, so you have to bear that in mind. We just had the news, so maybe just placing an entry straight away isn't the wisest thing to do, just in case. We just had a very strong impulse. We did slow down just before, we've come in. Now as we go into our order block, sorry, I should have just done the same thing, which I will do now. As we can see here, we had that slowdown on the 1 minute. Now, what gave us confidence with this move? Not only did that resistance hold, as well as the order block, but then we had this impulse. This impulse broke the minor structure on the 1 minute, right? We left equal lows here. We've had this impulse as well. We've left equal lows here as our liquidity. We've got this new order block right here. And this is actually the trade that I took, which I posted on my story. I'm not sure if anyone would have seen that. Hopefully, maybe. But this is the trade that I've just taken, and I've just actually passed the funding talent 200k additional, so now 300k with funding talent on with this particular trade, holding it longer term, so it's more of a day trade. But yeah, 1 to 5 wise, hit just here. That's giving me a nice amount of breathing room. If we put it just above the order block, then we would have been hit a lot sooner. To be fair, we probably would have gone 2.5. We would have been hit before even taking those equal lows there, right? So let's just move this here. So before even taking those equal lows, we would have hit 1 to 5, being a bit aggressive with the stop loss, giving it a bit more breathing room. Then we're looking at 1 to 5 being hit just after those equal lows, but still makes sense as to why we're looking at retracing at the very least to where this impulse from, right? Which gives us our 1 to 5 once again. So now we're sitting at 15% if we're using 1%, but let's just stick with 0.5% now that we've gone beyond that 10% mark. We're looking at 7.5%. Repeatable process, same exact rules, same exact time of trade, same pair, using structure, using our premium end as well. So even if we took our fib, again, remember, it's not about what time frame we're using, it's the rules and principles. Premium end, order block, support resistance even. So even if we zoom in here on the 1 minute, you can see price broke. This is where it held support and resistance. Price broke, couldn't get back above to hold as support or break through. It's holding as resistance alongside everything else to give us that confidence to hold that trade, right? Okay, last one now. On to our last one. Okay, so another New York session, eh? So another New York session. So that was the last one here. Here we have yesterday's New York session. So we'll bring it back to here. Now, so what we've seen so far, price has gone from high and it made very discreetly a new low when it spiked out here. In doing so, created a new price range from high down to low. Price went into our premium end. Now, it's almost identical, these trades, to be honest with you. Look, we have our very clear support resistance bracket. Yeah. Now if we zoom out, go back to the time frame. I'm going to get rid of the fib just to clean things up for us. You can see very clearly held and been respected level once again, many occasions. If we zoom back even further, many occasions. Very clear level. Don't get me wrong, even with these levels, just like anything really, any tool that we use in trading, it's not going to work. It's nothing has 100% strike. So even here you can see the price came above, no problem. It respected before and now it's respected just after, right? It's how we use it in line with everything else. More importantly, the structure. If you notice in every single trade, the structure has been used on every trade from a higher time frame down to the lower time frame, and it's given us confidence and clarity in holding, and more importantly, taking and understanding which direction the market should move. So holding this trade all came from the understanding that the 4 hour made a lower high, and now we are here. I'm just going to bring it back. Now we're here. Why does that make sense? Lower high, lower low. Very simple. Gives us that confidence. Yes, price could have reacted from here and we would have managed our trade accordingly. However, the momentum's there. The structure's on our side, right? Until structure breaks to the opposite side and breaks this high, for example, that's when we'll then worry about buying. Until then, our main focus, even on a scalping point of view, will still be selling as much as possible. But if we're at a low point like we were for our I think it was our last example. No, our second example. So the first scalping example. That was a buy opportunity, but why? Because we were at a low on the 1 hour and the 4 hour. Right, we just made a new low. We need to make a new high, so it made sense to buy as well. And it just so happened it was in our New York session for us. Let's just bring this back now. So, key support resistance area, premium end of the fib. We then get this break of structure here on the 15, taking out this low. Break of structure. We can then go lower to investigate. As we do, we can see clear order block. Right, last candle before our break of structure. Okay, and then we have our entry. Same once again, want to give our breathing room, so we'll give it 3.5, give it about pip and a half difference. And then target wise, we can easily be targeting our low. Now, for us, we can easily be targeting our London session low, for example, or even literally just price coming back to a discounted end of this leg in case price was to go higher. And the beauty is we've managed to get in and out of our trade without that even happening, having to even get any lower or breaking any structure. Now what's interesting here is here's 1 to 5, so now we've hit our 10% over these 4 trades. However, we do get another opportunity right here where we then impulsed from as well. Same principle. You can see held as support, now resistance. You can also see that we had our break of structure from there. We've then come back to a premium for that leg, and then we had entry opportunities right here. Okay. And this one's going to be slightly bigger though, and this trade is going to have to be held. Okay, but just showing if you missed one opportunity. Now with this particular trade, it's a little bit slightly more difficult. Why? Because price is going to need to break structure. Right, it's going to have to break structure, and that block is quite large. Is there any opportunity for us to go any lower? There is, right here. Did price tap into there? Let's just check, shall we? Last candle. Price very discreetly tapped in, very discreetly. And this is where you have to ask yourself, if you place the trade, so 8220, yeah, we would have been tapped into that, and that would give us a much better trade. Okay, but still, two opportunities there then. 1 to 5 though still would need a break of, or wouldn't need a break structure, would be at the extreme low here, going into this block, which caused the original up move, and so that makes sense. So how did that then play out? We can just let this play out. You can see that price actually came just shy, I think like 1.445, yeah, before then retracing back up, tapping back into this particular area, back into that resistance as well, resistance holding price down, before then giving obviously a session. That's the Asia session there, which most people won't be trading, so we wouldn't have traded that. However, at least you'll have that understanding, and then price does hit you 1 to 5 for that second trade. So a little bonus trade there as well, whilst we're breaking it down. But that brings us to an end, really. Brings an end to this series. Hopefully that was helpful. I can imagine it was, to be honest with you, because I didn't end up sort of watering down the strategy or anything. It might have been a little bit all over the place because I kind of changed that last minute, the plan last minute, and just kind of went off the cuff there. But yeah. Hopefully it gives you a little insight exactly how we see the market, how we trade the market day to day. Very big insight into repeatable process. And again, I know I haven't gone into detail into all the concepts that we use, but that's what we do in the Viper group with our mentorship. I want to say massive congratulations to many of the Vipers who have been funded more recently, following the same setups and obviously more detailed analysis as well. And some of the Vipers who have been withdrawing absolutely phenomenal amounts, 10 to 20% a month on 6 figures with these prop firms such as FTMO and Funded Talent. We're talking 50, 60,000 a month. It's very much incredible, life-changing, even, and it's our proud, it's our proud moments, if you will, as mentors to be able to witness it. Students, achieving such things, and that's what we do it for. The legacy at the end of the day. So. Just to recap, we've gone through everything from the mindset necessary to the biggest mistakes traders made and to look to avoid, to obviously talking about what a repeatable process is and the power of one, to then giving you examples of not only day trading but also scalping, and even giving you examples of exactly how we look to do our sort of trading. So obviously if you have any questions, please feel free to throw them in the comments below. Feel free as well to check out our socials in the description. Please like, subscribe, The next video you're going to see is a breakdown of the trade that I just took a couple of days ago. Actually, I think I held it yesterday as well, so 2 days now, which is going to revolutionize the way that you see the markets. And I believe, if I'm not mistaken, it turns out to be a 1-to-40 risk to reward. So keep an eye out for that, and thank you for all your support, and take care.